GRRR is showing a modest amount of strength within a longer term neutral to bearish trend, up 11.33%. This is Tuesday, the 18th of November, 2025. The stock is equally trending as well as investors dissect the company's latest Q3 earnings, updated guidance, and the recently secured AI data center mandate, a development that has fueled both optimism and renewed scrutiny. The stock has become a focal point of discussion as traders weigh the disconnect between positive operational updates and the stock's continued volatility, with some attribute to market manipulation, short pressure, or broader sector uncertainty. A key point of debate is the company's cash position. While the company has outlined a sizable project pipeline and continues to emphasize growth in the AI data center infrastructure, one of the fastest expanding tech verticals, investors remain divided on whether the balance sheet is strong enough to comfortably support execution, expansion, and potential future contracts. Speculation around a possible share buyback has added fuel to the conversation, with bulls arguing that the company is undervalued relative to its catalysts, while skeptics question whether cash deployment for buybacks is realistic given cash flow concerns. Okay, people are, or rather, people in the trading and investing community are also passing revenue projections tied to new AI infrastructure deals and upcoming contract announcements. Bulls highlight that the company's AI data center mandate and expanding pipeline could meaningfully increase future revenue visibility and help establish the company as a niche but growing player in the global AI infrastructure ecosystem. They also point to the end of the blackout period, arguing that management of the company could soon issue updates, secure new agreements, or take actions that might support the share price. On the other hand, bearish voices point to the stock's weak performance despite positive news, suggesting that the market may be waiting for stronger proof of execution, clearer timelines, or improved financial stability. Some question the valuation relative to long-term risks, while others cite broader market turbulence as a factor suppressing movement in small cap AI names. Well, for now, volatility remains high, but the conversation is anchored around upcoming catalysts, potential new AI data center contracts, revenue impact from already secured mandates, updated financial guidance, the possibility or improbability of a buyback, and whether Q4 or Q1 could mark a turning point for sentiment. Okay, so that's what's going on right now. That's some sentiment about what's going on. So extrapolation of its 3 period moving average is saying that yeah, it might get a rejection. It has already had a rejection, so this rejection may remain in place. Yeah, it's not yeah, the rejection we're looking at right now is going to lead to a contraction. Yeah, it's yeah, the contraction, as a matter of fact, is what we're facing right now. So it's expected that it's going to continue at least up till the 21st of November, Friday the 21st, and then by then it may have dropped below its 40 period moving average and wouldn't really go beyond it. So that 40 period moving average may begin to serve as a primary supply line in that each time it closes within one standard deviation of that moving average, it might decline. Okay, so projections are currently saying $14.54. What are the odds of it? It looks like it is a critical projection. So if for any reason it closes above that moving average, it might retest 14.84, 14.87, the printed yesterday, as a matter of fact. Yeah, it might go ahead and do that and even go ahead and retest 15.16. The probability of it retesting 14.9 is not high at all, very, very tiny. But at the same time, the paradox of all of these things is that sometimes when the probability is so tiny, that is when it may actually turn out to happen. When it's very high, it may not happen. When it's high, you may find out that you'll find other previous highs, previous resistances. Having You may find other previous resistances that are also nearby, that are also high, and you would expect them to happen, and they wouldn't happen. So let's see how it goes. Yeah. So that's what's going on. The stock has been trending for a couple of hours now, and this is the pre-market session. I don't really think we're really going to see a lot in terms of activity going on. I don't really think so. Yeah, not a lot at the moment. Okay, but volatility is expected to get stronger, and the stock is equally optionable as well. So, given that we have this sort of extrapolation here, the algos are not really expecting anything to the upside. A reversal of the downtrend is not expected to play out. This downtrend has been in place since early the whole of October, and obviously this month as well. So it's actually saying that it's going to be at least 2 months of you know downward pressure. So, but given this extrapolation that is saying that nothing is going to come up, option strategists may be considering things to do on the options pit as it concerns the stock. Let's see now. What are the odds of it retesting $17? Going by what we're looking at right now, it doesn't look so fantastic. So these are some of the things they may be doing. They be considering selling a $17 strike call and buying a $16.5 strike call as well. That will be a credit spread and all that, and a lot more stuff that can be done as well. So well, nothing very much going on apart from what's going on right now. The stock is trending. People are talking. Short interest is no longer that high, but still there. No longer that high, but still there. We've observed around 6.6%. But still, it is there's still something, still a decent amount of short interest, but not the one that not high at all, not high at all, not high at all, but it's there anyway, regardless. So just have a look and see what you make of GRRR and thank you very much for watching this video.